Ryan, you guys, you crypto guys, you talk about the Fed all the time and permissionless stuff and censorship-free store of value. Doesn't the Dogecoin thing just show that it's all a big gambling game?
Well, you could say the same thing about the stock market and GameStop and what we saw earlier in the year on Robinhood. So I think there's a bigger trend at play, which is more retail investors are buying into meme stocks, meme coins, and having fun with it. And Elon Musk has quite the cult following. So when people see that he's going on Saturday Night Live, and he jokes that the episode is going to be called the Doge Father, a bunch of people kind of follow suit and have a little fun with it. From an outsider's perspective, it does look a little bit crazy, but Dogecoin, if you just take it with a grain of salt as part of the broader market move up in crypto, it's not quite so outlandish. The asset class as a whole has performed, just incredibly, staggeringly well so far this year.
Yeah, it has. I mean, we've also seen a lot of activity here, Ryan, in some of the other cryptos out there, and not just the ones that were basically started specifically to be jokes here. The rally that we've seen lately in Ethereum and in some of the other cryptos out there. I am curious as to whether there is a sort of a fundamental story here that's driving some of this, because it's not all just hope and faith.
Yeah, exactly. And I think if you look at some of the assets that have performed really well, Ethereum being one of them, the decentralized finance assets being another, that are in some cases up 5, 10, 15, even 20 times, even year to date. A lot of it is driven by increased network activity that's actually driving fees to those token holders. In Ethereum's case, there is going to be a new fork over the summer and a new change of the system where the transaction fees are actually going to flow through to the holders of the currency as they transition to proof of stake. So it's a really capital efficient asset that can be staked and used to earn some of the fees that are passing through the system. That's the case for assets like Maker, Compound, some of these other decentralized lending, decentralized derivatives markets that are actually processing real transaction volumes in the tens of millions of dollars on an annualized basis.
Ryan, how much are you starting to see, of course, what drove Bitcoin higher a lot was talk of institutional players getting involved. Now, they seem to be latching onto Ethereum too. How soon until you see real institutional participation in some of these altcoins, or in terms of some of the, real DeFi, real products that are being built?
Well, these things take multiple years and multiple cycles in some cases to kind of come up the curve. And the way that I always think about it, you have overlaying hype cycles in crypto, and you don't just go from retail investors straight to the big banks and institutions of the world. There's usually a specialist professional class that takes advantage of the opportunity first. In this case, it's the crypto funds that emerged in 2017, 2018 that invested in many of these assets. So yes, we're just starting to see institutional adoption and real serious interest in assets beyond Bitcoin, Ethereum primarily. But we expect that that's going to take a couple more years before larger money managers start dipping their toe in the water. And we might be getting close to a tipping point where they take it seriously, since we are looking at assets that command 50 billion plus valuations beyond just Bitcoin and Ethereum today.
Okay, I'm sure you want to talk about stuff that's not Dogecoin, but I want to go back to it for a second, for real, because, you look at Dogecoin soaring, and you look at basically any coin. So you mentioned some of these DeFi protocols or coins, like Compound or whatever, and you say, like, okay, well, there's like some sort of like serious thing happening. But how do we know that it's not just someone going to the front page of your website and just buying one of those coins and Doge and Ripple and Bitcoin Cash because they see an up arrow? Like, how do we distinguish between like what's sort of real and fun and speculative versus what may be this sort of infrastructure of a new kind of finance?
Well, I mean, I think it's both, right? I mean, what's the fair value of a stock? What's the fair value of a crypto asset? And historically, you'd look at Bitcoin and you'd say, well, that's just a currency that's priced, and it's priced in comparison to gold or some other scarce commodity. These DeFi assets are different, right? The ones that have been really rallying this year have underlying unit economics that are interesting, and you can look at them as if they're stocks in a certain case. They're not owned by a shareholder base, they're owned by a token holder base, but those network fees are real, right? There's interest that's accumulating to folks that provision capital for lending markets. There's real capital that's being earned by market makers that are providing liquidity for these decentralized exchanges. So that's, I think, the big difference in this cycle and the 2017 cycle. Yes, 2017, the ICO euphoria, it was greater fool investing all the way up until it crashed.
Yeah.
Today, you're going to see a rising tide lift all boats, including Dogecoin, for better and for worse. But most of the assets that are in the top 50 this time around actually produce real fees, which is a far cry from what we saw in the last hype cycle.
And I am curious, though, that in this cycle that we're in right now and the rise that we've seen in Bitcoin and just all the other crypto assets out there here, there seems to be a direct negative correlation here to how people view fiat currencies, the devaluation of the dollar, at least the perception of the devaluation of the dollar because of all the monetary policy stimulus and the fiscal stimulus out there. If we ever get to a point, Ryan, and it might not happen in our lifetime, but if we ever get to a point where the Fed decides to raise rates and normalize monetary policy here, does that take some of the luster off of crypto assets?
I'm not sure. I think maybe temporarily because as we've seen when the Fed does tap the brakes on the market more generally, crypto is somewhat correlated to the risk-on markets. I think over time, though, those will separate, and there's so much fundamentally interesting activity that's happening at the protocol level for all these long-tail networks that is going to keep this rally going and this long-term secular trend moving in the right direction. So if you're asking me to give a trade recommendation, I'm not very good at it, but I can tell you in 5 years, my outlook hasn't changed.